First, with who we are, very briefly. So at OneSpan, we specialize in digital identity and anti-fraud solutions that create exceptional and secure experiences. From risk-based adaptive authentication to digital identity verification, our next generation solutions are delivered on a cloud-based platform that makes it easy to integrate new and existing tools and technologies to better prevent fraud and improve the customer experience. You can see here that we do that via our 5 pillars of solutions that I will make an overview in a few minutes. So we are present in more than 100 countries with more than 10,000 customers, and you can see some examples of them in Africa in this slide. So one of the biggest challenges today, as you move to a fully digital process, is the need to balance customer experience and security. This is not about a trade-off between security and user experience, but rather how to deliver both, offering an experience with the necessary security precaution while ensuring a frictionless digital experience. In the end, this is all about achieving the highest adoption rate possible. You want to ensure that the customer of your products and services can get through the process in an easy way, but with all the necessary security checks and balances in place so that the underlying transactions are secure and can be trusted. The last thing you want is a solution that is highly secure but extremely cumbersome to use, or super easy to use but not secure enough. You want to achieve the best of both worlds. Whether your focus is on securing the customer journey or an internal user journey, minimizing friction is a top priority for all banks and enterprises that we speak to. As your institution focuses on new customer acquisition and driving growth in your digital channels, it is more important than ever to protect the journey, because fraud and other security threats are becoming more sophisticated and are constantly evolving. But as you are aware, this has to be done in a way that ensures you comply with all the laws and regulations in the countries where you do business, and that your employees are operationally efficient in everything that they do. For establishing trust in your digital journey, we, as OneSpan, help you meet all these needs by delivering best-of-breed solutions to establish trust in people identities, the devices they use, and the transactions they conduct throughout the digital journey. Now, I'm going to show you how to prevent fraud and improve the customer experience through our 5 solutions. Let's start with the first one, so the intelligent adaptive authentication. And let's begin with the pain points for the companies. So get rid of static passwords, where adding extra security can become time-consuming and complex, but the major issue still remains the impact on the user experience. So the solution should be easy to integrate, removing static passwords and keep the user experience high. The use of biometrics. How dealing with complexity of all these different biometric solutions? What about the cost of integration? How to keep up with the feature? And other many questions regarding the use of biometrics. Here, the solution should be flexible and at the same time future-proof. Frictionless user experience. The solution here should be brings the user experience at the same level as the security, and at the same time must be intelligent enough to detect whether the user is gaining or not. Omnichannel approach. This means that the fraud solution is not only needed for every single channel. It needs to be able to analyze the information of all channels in one solution. How complex will it be to set this up? What about maintenance and support? It should be a solution that is simple to implement, easy to maintain, and able to investigate actions of the user over different channels. Flexibility and speed, of course. How flexible are solutions? How fast can a bank adjust this scenario? What about customers who don't use a mobile device as an authenticator? It should be again a flexible solution. And this not only by adjusting rules on the fly, but also offering a certain flexibility towards the end user. Finally, go-to-market time. But as you know, integration of new innovative solutions takes time. And can the bank be sure that when finally go live, everything is well set up without compromising user experience? It should be a solution that's simple and can be integrated with the existing infrastructure. On top, it may not have a serious impact on the go-to-market timeframe. If we consider all the pain points, we can conclude that the answer is a solution that ensures a high user experience to attract the new users and keep the existing ones. At the same time, to keep fraudsters away, a certain flexibility to gain a competitive advantage, and a simple integration with the existing infrastructure to enable a successful and quick go-to-market. On top of all this, the ideal solution needs to be advanced with ultra-modern intelligence and security to prevent and detect fraud now and in the future. So our intelligent adaptive authentication solution meets all these requirements. Behind the scene, it's a service that converts the unknown mobile device into a trusted one, which allows, for example, an invisible authentication. And all the actions from user, device, etc. are securely communicated towards your company and compared with existing information, analyzed and scored in real time. And this is not only to stop fraud, but keep the experience high. And if necessary, ask the user via secure push notification an authentication with a fingerprint, for example. Regarding this solution, you can see here the value. So we can clearly say first, make the user happy because this service offers a great user experience. The standard security checks are happening in the background, invisible for the end user. In case of higher risk, a simple action is required by the end user. For example, using biometrics, bringing security to higher level even allows the bank to offer more high-value services. Secondly, it's obvious that mitigating the risk stays top priority. And that's why the use of one-time password is a minimum requirement. The secure bidirectional communication brings extra security, so that trusted information will be used to profile the user and the devices in real time. That way, this solution is able to calculate the risk in a cross-channel approach. Nowadays, flexible deployment is not a nice to have, but it's a must-have. The adaptive authentication service is a cloud-based, offering a sandbox environment to simulate different device configurations, scenarios, etc. before going live. At the same time, our cloud-based service enables them to offer new upcoming technologies to their users. And it makes you ready for existing and upcoming regulations. This to avoid burning cash from potential fines and meet strict compliance requirements while keeping the user experience high. So let's move on to our risk analytics solutions. So it's fraud analysis. It's an intelligent anti-fraud solution designed to detect fraud across multiple channels. And, you know, fraudsters try to do many things with one goal, stealing money. There are different ways of how they achieve their goal: account takeover, new account fraud, and payment fraud payments. So you can see here all points related to how to protect your business. I'm not going to read all the points with you, but you may notice that you have to analyze the risk on different levels. But let's go further in our discussion of how our risk analytics solution can help you. A fraud prevention solution is all about information and how to deal with it. And all this with two major goals: prevent fraudulent actions while minimizing the impact on the user. And yes, information is the key to success in mitigating fraud attacks. It can come from anywhere: digital interaction with the bank, user activity, and also devices. This amount of data can be extended with information from other databases like existing historical data, hot lists, etc. Okay, it's great to collect a lot of information, But all this information as a whole does not provide much useful information. There is a need to expand the information. For example, how many times is the same beneficiary seen in the last 12 months? This enhanced data can then be used to obtain more accurate prediction results from a decision support system. You know, fraudsters are very inventive. A need to implement machine learning is mandated to find anomalies a human being cannot see. So we have to analyze all information, and this analysis will finally result in a score, which will have impact on the action to be taken. Low or no risk, allow the action. High risk, block the action for further investigation. Medium risk, challenge the user with, for example, a re-authentication with a fingerprint. And all this needs to be done in real time to keep the user experience high and at the same time to stop the fraud expansion. Now let's go to some important questions. I have two questions that we have received from our biggest customer in relation to the topic of the day. So the first one is how OneSpan helps mitigate account takeover, new account and payment fraud in their organization. The faster financial payments are made, the faster fraud takes place. OneSpan solution leverages the latest machine learning and sophisticated data modeling and analyzes data in real time to produce a transaction risk score. The risk score can then drive intelligent workflows that trigger immediate action based on predefined and or customer-defined security policies and rules. The combination of intelligent automation and risk scoring streamlines processes and helps prevent account takeover, new account fraud, and mobile fraud. Another one is how OneSpan allows financial institutions to provide a positive and seamless customer experience. We can answer that by leveraging machine learning and data modeling to make the most accurate prediction of risk and fraud. OneSpan can proactively identify and prioritize fraudulent transactions for fraud analysts to review. This ultimately provides a better user experience through fewer false positives and supports top-line growth with increased customer loyalty and retention. Now, regarding the mobile security solution, we have our mobile security suite, which is an all-in-one toolkit for app developers to natively integrate advanced security, authentication, and e-signature capabilities into mobile financial services applications while reducing development overheads and associated costs. And you know, we all live in a connected world, whereby the mobile phone rules the digital world. It allows the end user to stay online wherever he goes. Expanding the mobile channel offers brand differentiation and increases the end user's loyalty, which can result in a growing business. The fraudsters abuse the weaknesses on the mobile and try to do many things to get access to end user credentials. They access the same channels, which gives them the possibility to download the app, investigate its security setup, and abuse its vulnerabilities. And fraudsters will abuse the fact that the app owner, for example, a bank, will never have full control on user's device. And for this, we need a holistic approach because overall protection is mandated. One solution that is able to increase the app's protection, to add security during the execution, and at the same time provide a way to offer a bidirectional secure communication. In fact, we need a solution to stop fraudsters and at the same time keep the user happy. One solution that increases the user experience without losing an eye on security. One solution that provides a way to implement a real omnichannel user experience, using the same mobile devices for different kinds of payments, as well as an access device for the online channel. To meet all these expectations, we offer the mobile security suite, enabling mobile functionality and growth while transparently protecting the users and the app. And you can see here, all these building blocks combines into one framework, can be seamlessly integrated into an existing or a future app. You can see here all technologies available on our solution, such as app shielding, secure storage, electronic signatures, face authentication, fingerprint, push notification, etc. Of course, the choice is flexible and you can opt only for one, two, or three technologies. You can see here the results that you have by choosing the mobile security solutions. The use of biometrics as an authenticator method is there to enhance the user experience. The mobile security suite allows companies to combine this experience with flexibility of deployments, flexibility on the choice of biometrics, operating system, etc., without losing an eye on security. The OneSpan mobile security suite allows a company to go for frictionless user experience. Most of security checks happen in a transparent way, invisible for their user. The application shielding prevents fraud on the app from day one. It's capable of controlling application execution and detecting and preventing real-time attacks. Additional technologies such as Pronto or push notification allow to introduce new user journeys for login and payment operations. They are the most secure and convenient, and they rely on the trusted mobile device. And why not do more with your mobile app? Allow the user to sign a document on the mobile itself with a fingerprint, a PIN code, or even with face authentication. Companies will never have full control over their customer's device. Therefore, it should be possible to calculate the risk, introducing an extra security layer on the backends. Sure. Now let's move on the identity verification that can prevent fraud and keep the customer experience on the top level. You can see here again the pain points for financial institutions with the identity verification through the secure agreement workflow. First, a poor user experience. Today, many financial institutions offer online financial services, including account opening and personal loans. However, this should be a full digital experience. The applicant is often forced to come into the branch to verify their identity. After this, there might be numerous due diligence tasks that bank needs to complete in order to deliver the request service, which can take several days or even weeks. A digital user experience where the full process happens from start to end on the same channel is more than welcome. Lack of control over the process. The manual process in the backend is not only cost inefficient, but also implicates a lack of visibility and control. Too many different channels can be involved, which makes it hard to have an effective audit trail. Here's the need to focus on the front office, which then logically flow into their downstream back office systems. Ability to be agile and future-proof. Financial institutions are not as flexible as they would like to be. The complexity of the entire process makes it hard to be agile and flexible, which matters in today's digital world. Again, the digitization of the workflow will not only offer flexibility, but also a fully branded experience across their use cases, channels, and geographies. The risk of unenforceable agreements. Digitization of the complete workflow is a game changer. But how can this process be compliant compared to a paper-laden flow with wet signatures? The legal enforceability can come from the full visibility into the how, where, and when the process took place. Something that simply isn't possible in the paper world. And how we can help these companies in transforming their digital user journey? First, by modernizing agreement automation. It's all about enabling new digital channels, growth opportunities, whether that's the mobile channel, online channel, call center, or branch. From physical, semi-automated, so moving away from an inefficient and rigid manual workflow, which is not only a major time suck for employees and cost ineffective, but also user unfriendly, to fully automated, So towards a fully automated workflow where the focus is on the front end and user experience, which allows an account opening or requesting a personal loan in just a few minutes. Finally, a brand new experience. This new way of working improves the digital user experience, lower the cost thanks to operation efficiency. The flexibility of the single platform makes companies ready for the future. And all this while keeping an eye on the legal enforceability, enhanced by recording everything the end user saw and did. Finally, our last solution that will help you to prevent fraud and keep the user experience high is the electronic signature, and honestly is the most requested solution since we are working remotely, so since the COVID-19. The key drivers that support this trend are improved customer experience, allowing users to sign anywhere, anytime, and on any device. Also, improved efficiency, which reduces processing time, errors, and costs. And finally, strengthens compliance and legal validity, which enforce business rules while capturing detailed audit trails. And without digital process with a signature, turnaround time for signed documents can take hours, days, or even weeks to complete, and errors are prone to happen. The problem with the paper signing process is that it's complex, time-consuming, and paper-intensive. It will take several weeks to process in-house and external signatures. My last slides. So you need a digital transformation. Integrating electronic signatures while moving to a digital transformation helps speed up a contract approval process. Moreover, it creates a better experience for staff, employees, and customers. And while a digital process saves time and money, customers can use the web, go online, or call into a call center and give them the flexibility to e-sign on mobile devices, anywhere, anytime, all the while reducing paper consumption and archival space. Additionally, identity verification and authentication methods help provide an additional layer on security with detailed audit trails for compliant purposes. This is the end for me. I hope to have give you useful information that will help you to achieve your digital transformation. The goal of the transformation is for you to be able to prevent fraud and keep the customer experience at the highest level to keep your existing customers and attract the new ones. If you have any questions or want more information, please contact me via email or LinkedIn, so I will be happy to detail our solution and make demos. Thank you and have a nice day.
Thank you so much, Samet. That was a very interesting presentation there. It's very imperative that as we deploying these technologies and trying to address and mitigate some of the risks that are inherent in the financial services, we need to consider customer experience. Samet will be available at the last session as well in the panel discussion. Please feel free to ask him any question related to the presentation. Now, because of time, we will proceed very quickly. Our next presentation is coming from Kumaran Selvarajalu. And he is going to be talking about the IoT and payments. And he is going to look at how the Internet of Things is transforming the payments industry. Kumaran, the stage is all yours. Kumaran, I think your volume is not there. We can't hear you. Yeah, sorry, we cannot hear you. Okay, maybe let's take a short break whilst we trying to connect Kumaran. Let's just maybe 2 minutes break, and then we'll try to reconnect with Kumaran. Just 2 minutes. You can just sit in one of the tables and have a chat. Thank you so much. Okay, welcome back, and apologies for the technical issues. I think now we sorted, ready to go. Kumaran, the stage is all yours.
Thanks, Nzele. Good afternoon, everyone. It's a pleasure and a privilege to be with you. My name's Kumaran. I work for the Banking Association of South Africa, where 2 years ago I started 2 or 3 years ago I started a payments division, and we do all sorts of exciting things like look at cash, look at payments, and look at how the payment system will be modernized on a large scale. The role of the banks, where the banks will feature in this, and how the system itself will evolve. Unlike when I started my career in payments, the field of payments has become particularly interesting in the last 10 years or so, because it's become a nexus point for many great competitors. So I was watching the Godzilla versus Kong movie over the weekend, and so the imagery is fresh in my mind, and I'll share it with you because it seems to be that what we're talking about are titans, right? We're talking about the titans of the banking industry, or if you want to call it the banking paradigm, which has been around for a long time, and has certain does things in certain ways, and we'll talk about that in a little bit. Then we have the big tech companies, the gorilla tech companies, the Kongs, if you will, the titans of advanced data and connectivity algorithms. And I think they are dangerously not very subservient to any nation's laws, except possibly to the global superpowers, the United States and China. In that case, in our personal movie, then we have another titan that's emerging, which is quite interesting to me from a payments point of view, because as I'll tell you in a second, we talk a lot about big numbers and exponential growth, but the other titan, which has sort of been invisible to payments for a long time, is this Internet of Things environment, because it brings even bigger numbers to the game. No longer is it just enough to know that there are 7 billion, 7.6 billion people in the world, and 5 or 6 billion SIM cards, maybe more than that. Now we have devices, right? Each person is possibly connected to 10, 15, 20 devices. And this in turn is bringing another aspect to the model of communication and contactability and financial services, and most importantly, because this is where this all comes together, in terms of real-time data, in terms of what people are doing. So I started my career in a company called Otis Elevators, and this Internet of Things is not particularly new. Back in the 1990s already, Otis was embedding chips into elevators and escalators that did diagnoses of machines, and was preparing for reporting for when the mechanics came around, and would do things like send pager requests to advise that this lift is going to, and this was a form of predictive analytics, this lift is going to have a problem soon, and we need to send someone out. And that gave Otis a huge competitive advantage at that stage. Now we're seeing more, and as some cards have come in, the model has grown wings, and we're seeing the IoT is huge, and the numbers are big. I mean, I hear some people say 50 billion connected devices in the next year or so. Other people say, we always underestimate these things. It'll be a lot more, and when driverless cars and things come in, it'll be a lot more than this. And then, I've mentioned the titans, and there's probably others. There's the big guys like the policymakers and the regulators, but there's also the fintechs. And I'm often asked the question as to where do the fintechs play in this, and I think consistently the argument is that the fintechs bring innovation and change. The fintechs, adapt the model, they grow it, they keep the banks on their feet. They're crucial adapting and creating new solutions to problems. If we don't have the fintechs, then we're going to be, we're going to stay in the old paradigms. So moving forward, and I'm not so much going to present to you as initiate or catalyze a conversation with you. What I'd like to do is not to talk about technical detail on the IoT, primarily because I don't know enough to be able to challenge most of the people in this room on the technical aspects or the standards or what happened last week on the IoT. What I'd like to get into is the bigger picture, where this machine world meets the human world and what happens when that intersection takes place. And I think it's something that affects all of us. And for those of us who have children like me, it's a particularly interesting space. So I'm going to start with a look at the human potential. On the screen, you see a couple of digital depictions of artwork done by a lady named Alexa Mead, who's in America. She does something fascinating. She takes three-dimensional space and then turns it into a two-dimensional painting. It's fascinating. It really boggles the mind, because at once what it tells you is that this is about human creativity and intuition in knowing what is art and what is beautiful. And interestingly, it's a regression almost in terms of how we would expect things to happen. And it's in my mind, it has such fascinating potential for science and the way we see the world. But the big thing about Alexa Mead and what she does is that she does it because she has spare time to exercise that creativity. But we'll get to that in a second. Then we move on to a slightly different, slightly more cognitive or quantitative way of looking at things. So everyone's seen the exponential curve. It's particularly interesting because it gives us a sense of how change is accelerating and what it does to us, and that companies are not safe anymore. No one is actually safe in their paradigms. It constantly keeps moving. The curve constantly keeps going more and more vertical. Sam Harris, the clever guy from America, did a talk on TED, which I encourage you to watch, which is on the spectrum of intelligence. And what you see on the screen in front of you is he positioned a chicken on the left-hand side next to a human being, an average human being, like me. And then he put next to that average human being a guy named John Van Neumann, who was supposedly, if you believe in this stuff, regarded as one of the most intelligent people who has ever lived. And then interestingly, Sam Harris didn't position AI or technology or the ability for machines to think and make decisions. Because he said, interestingly enough, that for machines and for machine intelligence, that is unbounded. There isn't really a limit. And I find that very interesting in terms of looking at this move towards exponential growth and how we need to be able to see what happens, but also bring the humanity back into this. Moving forward, we then get back to the human side of things, and whether you believe it or not, it's a model. It's a useful model. It helps us focus our minds. The satellite view is that we are doing better. If you read Hans Rosling and Factfulness and these kinds of things, the satellite view is that we are, as a species, doing a lot better. We live longer. There are more people prosperous. More people have been taken out of poverty. There are fewer wars. There is generally greater human prosperity, and that's exciting to think about. But then we look at it from a human being's point of view. What we see is a guy like Maslow said back in the 60s. Human beings have certain needs. They have there's certain elements to prosperity and fulfillment. As you can see, I've indicated where payments fits in. It's not particularly important. I think my work and I think the stuff that I do is exciting, but it's not particularly sexy or anything like this. There's so much more that people can do to achieve the kind of potential that the Alexa Meads and the Sam Harrises of the world get to. So, in looking at this, I then want to contextualize an important point that came to my mind when I was preparing for this talk. So I'm probably older than most of the people in this room. At least I'd hope so. And I can remember when my dad used to do payments, right? And what he would do is get up on a Saturday morning and he would go to the bank, he would draw money, and and he would go from creditor to creditor, and he would do his payments. Took up a huge amount of his time. He was a musician, and it deterred from that part of his life. But it was interesting that today I don't need to do any of those things. I do my time spent on payments is measured in the minutes, not hours, definitely not days. And as we move towards the IoT, and even though there are more and more micropayments and things happening, there's going to be so much more assistance, so much more augmentation of the human ability to solve problems that you're going to find a lot more time being given to people. It's important that everyone gets access to that. It's a great story, but it's not the full story. And I'll give you some indication of that a little later on in this conversation. But now let's look at payments and to some extent, the Internet of Payments. So, and you can see my shaky hand in this. This is an exponential curve that gives us some indication of where payments has come from and where it's going. Pretty much like if you tracked GDP growth, or if you tracked the number of billionaires or wealth or anything like this, you'd get a similar kind of curve. And what you see is, and this is the digital national payments system potential, right? I'm sort of stealing from Sam Harris. And I've charted a couple of things. I mean, it's not meant to be historically or quantitatively accurate, but I've charted a couple of things just to give you an indication of how we've progressed. So money has been around for a while. So I think 600 years or something ago that the first coin was minted. It's passed from one hand to the other hand since that time because it was the exchange of value. It's a bearer-based instrument, which is quite interesting. We then moved into centralized kinds of structures. We started going into banks and those kinds of things and then banks started communicating with each other. Bank paper was trusted between banks. The central bank got better at managing the banks. For a long time, banks communicated money transfers via things like secure telex, which was replaced years later with stuff like SWIFT. And there was this move in the 1970s. What happened was there was a huge move towards computerization, and banks played not just locally, throughout the world, played a leading role in that because they had such huge amounts of data that they were crunching, not necessarily complex data, but just large amounts of it that they were crunching, and also because of security and these kinds of things. What we've seen in recent times, things started accelerating, and we come into the modern times. I was part of the team back in 2003, I think it was, that designed the real-time clearing system, which hasn't achieved its potential, sadly, and should have achieved a lot more than that. But things accelerated. We can talk about the RTCC story another day. We're now moving towards Vision 2025, and a key part of this will be to move to the Rapid Payments Program. Exciting initiative. It's a move towards credit push real-time payments at a low value level that will happen between people from one bank to another participating bank, and possibly other agents and things like that later on. I don't know how far the model will extend. But what I can say, I can't predict the future, and I don't like doing that. But what I will say, I think it's fair to say, is there's a couple of things that I think are firmly rooted. One is mobile phones are around for good. The next is that there will be more payments and micropayments. It won't just be financial data that we're moving across networks. It will be data associated with financial data and financial movements. Geopolitical or geo data, more integration, greater challenges to legal frameworks. I think the IoT is going to put huge challenges to the sort of Roman Dutch and common law principles that we hold dear. We're going to be challenged by the great movements and things like the Facebooks and the Googles of the world, who are supranational to most countries, and in many cases more powerful than most countries. The IoT will play a particularly big role, as micropayments made by machines will remove a lot of the tedium, but also it will be encouraged by the industrial sector in terms of competition. So that's just moving forward. So then, if we think about payments, and I find this to be useful because I don't want to sit and blindly defend the banking industry, or turn against the banking industry and say, well, it's all happening in the past. It seems to me things are a little bit more complicated than that. So when we consider payments, there's two possible ways, I think, or probably many others, but two ways of looking at it. One is that you could think of the payment system, or even banking for that matter, as a Rube Goldberg machine. For those of you who around my age will remember, there was a game back in the 1990s called The Incredible Machine, which required you pull together all sorts of elements and press a lever, and then something happened and the machine freed a cat to pop the balloon or did something like that. And what's interesting is, one view is that banking, perhaps payments, is a Rube Goldberg machine. Payments particularly. Maybe it's an over-contrived set of processes and rules to solve what ostensibly could be an incredibly simple thing. I mean, it's a message, right? It's bank, operator, bank, store of value, switch, store of value. Or in a distributed environment, you don't even need the operator. Right? But that's the one view. On the other side, we get to the scale involved in the payment system, and it's mammoth. The largest value system in the world is a continuous link settlement system, and it's on its peak, it moved $11.1 trillion in a day. The South African system moves about 120 trillion every year. I think that's the GDP turned around every 3 days or 4 days or something like that. What's more important, though, is, and for those people that are sort of Six Sigma specialists and the like, is you have all these payment factories, you have all these banks connected to one another. If you get to something like the EFT PCH, you have about 23 of them connected. And they come together to give usually 7 Sigma, 8 Sigma, close to 100% typically success rates, right? And that's quite impressive. And that's really important when you get to payment systems and you want to ensure that this works and it's working across the old mainframe that one bank put in the 1970s and the new stuff that another bank put in 3 weeks ago. It's very important for that to happen. So I'll say to you that there are two ways of looking at it, and I'm not sure which one of the two it is, but obviously progress will challenge both. Yet, and with all of that in place, we have to do better. So I don't know about the people in this room, and I know there's lots of people from our sister countries in the room, but for me as a South African, this was a particularly emotional front page of Time magazine. So having spent 20 years in the financial sector, talking about things like financial inclusion and talking about things like improving the lives of people, this picture depicted something very, very different. It said that we haven't done enough, right? We're an unequal society. We haven't actually been able to drive these benefits, the sort of benefits that create the Alexa Meads and the Sam Harrises of the world. We haven't been able to open up digitalization properly for the rest of for a lot of South Africa. I won't talk to the triangle because I've got a better slide on the triangle itself, but we'll get to that in a second. But just to say, this was a particularly, it's a sobering moment for a South African to look at this. So then we get into where we are with payments, and so this triangle is an interpretation of the previous one. So when we get deeper, there is a lot of work to be done in payments as we move to digital society. And generally, we accept the premise that digital society is a good thing. It improves GDP growth. It improves, the access to information. It improves a lot of things. It creates political freedoms. It creates economic access. It creates reach. It provides information, and it allows people to do amazing things. And particularly in Africa, the growth in SME markets due to this kind of access to information has been unbelievable in the last few years. But again, we look at economic status on the left, right? I've charted economic status. This is again one of my subjective charts. It has no quantitative basis. It's how I see the world. And what we have is some functions. We have concierge type things. I'm fortunate to be a middle income person who has a private banker. So if things go wrong for me, I can phone someone and say, can you do this for me? And can you help me with this? I'm fortunate that money stays long enough in my bank account that I get interest and I can do investments. I'm fortunate to have huge amounts of barriers to my privacy and things like that. I'm protected. And of course, the custody function over my money is of primary concern to me. And as we come to the right, you'll see the various payment products have been illustrated. And what I've done is subjectively gone and sort of scattergrammed them across the pyramid. The words are supposed to be indicative of market size. Cash is by far the biggest system in South Africa, 50% by value and probably over 90% by volume. More importantly, much more importantly, it is the only universal payment system in this country. It is the only system that about 18 million people, if you look at the upper estimate, in SASSA have access to. It is, and that is a huge statement on our efforts for digitalization. And so as we move forward, as we move to the IoT, as we move to these things, it's really important for me and for the work I do that this is addressed, that green space. If we're going to change it, we don't forget that bottom half, and not to be insulting, but we don't build too many sentence solutions. So then, why do payments matter in the context of things like the IoT and the bigger picture in the world? And this is a goldfish bowl view, as you can see. It's a view coming from a payments person. But I can say payments are important to many different stakeholders because they're a networked primarily because they're a network business utility, and that's important. Network environments are very important. Energy is important. Connectivity is important. These things drive or underpin the need for all of this connection and data at the bottom. Payments is networked and it enables inclusion. It enables value creation. It enables the creation of different markets. It's important to people, businesses, and governments because there are no contracts or anything like that happen, financial contracts or anything in the financial space that actually can be legitimately called financial without a movement of money or value from one party to another. So therefore, they're integral to trade, commerce, and the productivity of nations. And we're seeing this more and more. To the business interests, payments generate real-time, standardized, context-specific data that enriches big data. This is really, really important. And you'll see that a lot of the banks and many other parties have looked at this information and they've been able to leverage this to be able to give daily positions, to be able to give hourly positions on and now real-time positions on what people are doing. And of course, payments is an attractive source of event-driven income. And I won't call it just annuity income like transactional revenue. It's event-driven income such as ad revenue and human time that's dedicated to something. Moving forward very quickly. All right. So where does payments and the IoT converge? It's interesting because there's all sorts of standards and things looking at the IoT. It's going to be about sensors and actuators and data and connectivity and all of these things. And it's going to lead eventually, and on the left-hand side, you see this thing, it's going to lead eventually to smart cities and smart regions and maybe a smarter world. And then on the other side, you have payments, which is about origination and clearing and settlement, and the recourse model, right? We often forget about that because you want to be able to do something if your payment goes wrong or if your money gets stolen, right? And so what we do from a payment side is we are aligning ourselves to Vision 2025, and it's got some great objectives. That's what we're aligning to. But the convergence point for me is a little bit more interesting. You'll see in the middle, I've put a person, an icon of a person holding a child. And that's for me the convergence point. There's a shield around that person. It's a machine shield. It's an augmentation of a human being, where the machines or the world around them helps them make these things, helps them bring together and makes their lives easier, their businesses, their studying, their entrepreneurship, all of these things, right? And I think that's where it comes together. I think it comes together in this world where we can actually define what is the value to human beings in this payments environment. So it's more, we need that kind of policy direction in the space. As we move forward then, we see there's a high road and a low road for the IoT. From a South Africa point of view, from any country's point of view, we need to be able to do a number of things. We need for payments to enable all sorts of things. We need for the IoT to enable all sorts of things. We also need to be able to protect our identities. We need to be able to ensure that while the world is moving forward and becoming more and more anonymous and decentralized or centralized, we shouldn't forget that there's human potential at the center of it. And ultimately, the thing we do, all of the stuff that we do, is to make the lives of humans more prosperous. So the high road is this thing, is a concept of the human at the center. The human should always be at the center in terms of all of our policies and in terms of our efforts. The low road is the lost humanity piece, where we end up in a dystopia where machines are making decisions and buying products. And you know, if you're like me and you own a Kindle and you've bought 50 books that you've never read, then that's the kind of the low road. You know, permeate that with an IoT. I've come to, you know, to the end of my conversation. But what I'd like to then say is, and this is where it gets very interesting for me. In looking at reflecting back at my dad, I realized that it's not as simple a conversation as I think, because even though he spent all of his time doing those things, going around and making payments, it was in the physical world, and what that did was I spent that time with him, and we were able to do things, and we were able to form relationships, and all sorts of wonderful things happened. So it's not as simple a thing to say, well, as long as we make life faster, and as long as decisions happen faster, and as long as, you know, the computer can beat Kasparov, as long as AlphaZero is going to do more, that we are progressing. We still need to ask ourselves, where does humanity come from in this? And I've put down 4 books, which for me are particularly relevant to this space, and they talk to different aspects of society and the different stakeholders. I'll quickly touch on them. The first is The Entrepreneurial State by Mariana Mazzucato, and it talks about how states create innovation and how they drive things forward. Fascinating environment. Deborah Spar wrote a similar kind of thing, talking about the role of state and private sector, and how innovation and regulation is not simple. It's not a simple one follows the other model. Clayton Christensen, then in The Prosperity Paradox with the Fuso Ojomo, then looked at Africa and numerous other countries and talked about value creation. It's not as simple as saying because there's disposable income in a country or because there is money, that money will be made. That's not how Celtel started in Africa. It started on a premise that human beings can create value, and that value can come from almost nothing as long as effort is expended towards it. And that's what happened with Celtel in Africa. The big telcos turned their backs on it, but Mo Ibrahim came in and launched this interesting thing where value was created, and it's now driving so much change in Africa. Lastly is a book called The Second Machine Age, which talks about the inflection point that we've reached, which is where human thinking and computer thinking and machine thinking has all come together. Societal thinking has all come together to solve some really, really big problems. So we're seeing things like rapid expansion in numerous fields, and we're able to solve much, much bigger problems. Finally, on the left, you'll see there's the visions, the mission statements from a number of the Titan companies out there. And what's interesting to me is how broad these statements are. They talk to humanity itself. They talk to, you know, it's not a simple statement saying we will drive the car to the end of the road or we will put a man on the moon. This talks to data. This talks to human identity, and this talks to what happens next with people. And I think it's a space that we need to pay particular attention to and guide our policymakers and regulators. Thank you very much. I'll take any questions. I'm on LinkedIn, and you are more than welcome to email me as well. Thank you, Zanzele.
Thank you so much, Kumaran. That was very insightful. I like that you bringing the human element into this. Ultimately, any technology that we implement or deploy, we ought to improve livelihoods. And I like the presentation because you're bringing how important it is in changing lives when we implement these technologies, IoT, etc. Thank you so much, Kumaran. That was Kumaran, the Senior General Manager at the Banking Association of South Africa. Up next is Lorien Gamaroff. And Lorien is so fascinated about blockchain and Bitcoin. He's the CEO and founder of Bankymoon, He's the co-founder and CEO of Centbee. Lorien, the stage is all yours. If you're ready, you can share your slide.
Thank you. Thank you very much. Can you hear me okay then?
Absolutely. Can hear you clearly.
Great stuff. All right. Well, thank you very much for everybody for being here. It's exciting to talk about this subject, especially coming after Kumaran, because he talked about transparency in payments, and traditionally, blockchain and Bitcoin has been considered something that is anonymous and all that sort of thing. And what I want to do is just dispel some of those myths and talk about how blockchain, and specifically Bitcoin, and I'm going to focus on Bitcoin today, how it enables all that transparency and specifically financial inclusion and, surprisingly, fraud mitigation. If you've been around or been hearing about Bitcoin and cryptocurrencies, the idea that it's this anonymous system that's outside of the purview of government, it's going to bring down the government, it's something that money launderers can use. That's all been a false narrative that's been sort of infused into the whole industry, and it's very mistaken. And I'm going to talk about why, in fact, the opposite is true. And so what I'm going to do is I'm going to give everybody an overview on with the protocol, the Bitcoin and blockchain, what it is and what it's capable of. I'm going to talk about a case study, and the case study will be Centbee, because I've had Centbee now for about 4 years, which is a Bitcoin payment company. We are operating here in South Africa and around the world, and also we have been accepted into the South African Reserve Bank regulatory sandbox around for crypto companies. So we actually have a running business that's operating using Bitcoin and the original protocol, which is Bitcoin SV, and we're also doing it in a compliant, regulatory compliant way. And this is going to be something that I think is worth seeing, because so far all these blockchain projects and blockchain payment companies are all pretty much in that kind of proof of concept stage. We are actually a going concern and no longer a startup. We've been operating, and so I think it'll be interesting for you to see how Bitcoin has created a place where people can now use a Bitcoin as a payment system in a transparent way, which is very financially inclusive. And you can see how it allows the ability for there to be fraud mitigation. In fact, that's its strength, ironically. So, and then of course I'll end off with the regulatory compliance stuff, because that is so important today, given all the false narratives around what Bitcoin is and what it's capable of. So just to give this overview now, I want to talk about the idea of a blockchain token. This is now a generic term. What people have considered it to be is, in case of Bitcoin, a sort of digital token which has value in and of itself, but you should think of it more as something like oil in an economy. And you know that oil has a value, it's a utility and a commodity, and you use it to enable business and life. And without energy, without oil, you won't be able to have a functioning economy, a modern economy. So think of it as oil as being a commodity that enables business use cases. Well, blockchain tokens are supposed to be the same thing. They're supposed to be this commodity that you can use to enable all sorts of new interesting business ideas and to be able to improve upon existing business processes. So that is ultimately what gives it value. And because of its fungible nature, fungible meaning that it has the ability to be exchangeable. If you think about coins, ₦1 coin, it doesn't matter how clean or new or your coin is, a ₦1 coin is a ₦1 coin, you can exchange it. Blockchain tokens are supposed to be the same sort of thing. So think of it as a utility, a commodity on this new kind of network that enables you to do all these sorts of business cases. And then, of course, something that can be traded. So that's what allows it to become very much like gold became at the end of the day. Gold wasn't just this idea. It wasn't just this kind of mystical thing that people put value into. It still does today have a lot of commodity value in terms of jewelry and electronics and all that sort of thing. It's just so expensive. So obviously industry tries to find alternatives where they can. So just one of the most important things about this whole industry is that blockchain tokens can't have value in and of themselves. All they can have is a use case, a utility. And if they have a limited supply, then of course they become something that is valuable. I just want to make sure that I can still see everybody. Okay. All right, so let's not just talk about protocols, because I think for you to understand Bitcoin and blockchain and its value, you need to think of it in terms of how the internet works today. The internet is itself composed of these things called protocols, and these protocols are just designs for the way that information is moved around the internet. So what you could have today is we've got protocols that form the backbone of the internet. SMTP is for email. The TCP/IP protocol is for moving information on the internet. HTTP is for all your websites. FTP is for file transfers, and DNS and all these other different ones. These are protocols that the internet is built upon. Now, what you need to realize is that these protocols, the designs for how information moves on the internet, they're fixed. If any of these protocols had been able to change radically over the years, then you can think that all those businesses that are building web applications today, think about, the whole web, if the HTTP protocol had been able to change, then we wouldn't be able to create websites, because every time one of the developers or somebody decided that the HTTP protocol should change, it means that all those websites that have now been created around the world would also have to change. So a very important thing about protocol is that once the design has been put out there for that protocol, then it needs to be set in stone. Now, of course, technologies can come along and implement those protocols, and we have, in the case of HTTP, we've got web servers out there from all sorts of different companies, Internet Information Services, Apache, Nginx, and what they do is they compete to try and create the best technology platform that implements that protocol. They don't change the protocol, they change the software technology that implements that protocol. Now, if we want to think of a world where blockchain creates an ecosystem that can thrive in the same way that the internet has thrived because of these fixed protocols, we need to start thinking about protocols, blockchain protocols, as something that are fixed and set in stone. Now, why do I bring this up? Because what has happened over the years, specifically with Bitcoin, because as you all know, Bitcoin was the first blockchain protocol that was created. There's been a lot of sort of controversy or people believing that Bitcoin should become something for a specific purpose, and other people think it shouldn't. And there's been a lot of kind of debate about what should happen to this protocol. Now, if you understand the way that industries have developed over the last 30 years around the internet, if we want Bitcoin and these blockchain protocols to persist and to actually create a stable foundation for the future where we can now use Bitcoin payments or blockchain payments, then we need to think of it exactly in the same way, protocols that remain fixed. Now, why do I keep talking about Bitcoin? Well, Centbee has actually decided that we are going to settle on the Bitcoin blockchain for our payments company for a whole lot of reasons, which I'm going to talk about. But Bitcoin itself had a lot of division throughout the years. And without getting too much into the history, what happened was when Bitcoin started, it was a protocol that was fixed, but then it deviated. Part of the community decided that they wanted to make changes to that protocol to allow for all sorts of different features. And when that split occurred, a new crypto Bitcoin version was created. Even though, so the first one was BTC, and then when the split happened, even though BTC changed its protocol because it was the most prominent, it had the people who were behind those changes were the most prominent. What happened was the exchanges said that they would then allocate the BTC symbol to the altered version of Bitcoin. And the version of Bitcoin that remained constant was given a new ticker symbol, BCH, which became Bitcoin Cash. And then, of course, that happened again a few years ago, where Bitcoin Cash decided to make changes to the protocol, and then the protocol, the Bitcoin protocol that remained unchanged, had to get a new ticker symbol, which was Bitcoin SV or BSV. So Centbee itself, we decided that because of how companies have evolved over the years on the internet with a fixed protocol, we believe that the only way that we can have a protocol that we can depend on and that will go on into the future will be those that are fixed and set in stone. And that's why we've actually decided to settle on the original Bitcoin protocol, which is the BSV Bitcoin protocol. Now, this is important because if you are looking at blockchains for yourself and thinking about the future, then one of the most important things is to make sure that the people around that blockchain who are pushing that blockchain or promoting that blockchain, that they have that ideology themselves, that something remains fixed. So, and that's another thing about the original Bitcoin protocol. Now, a lot of people say, look, Bitcoin is all about, as I said to you, about these anonymous payments. That's not true. Bitcoin was actually developed with regulatory compliance in mind. One of the most important things is that it's a transparent ledger. And so this is what's going to bring me now to the fallacies or the myths around the Bitcoin blockchain, the false narratives. The first one, it being a cryptocurrency. Now, this is actually a false statement to say that Bitcoin is a cryptocurrency. Altered versions of Bitcoin like BTC and Bitcoin Cash and all these other blockchains, they are creating cryptocurrencies because they're trying to create a blockchain that is cryptographically not just secured, but encrypted. And that means that it becomes something that is anonymous. Now, if you understand anything about payments, and if you listen to that previous talk, you'll know that it's impossible to have a regulatory compliant payment system if you are using an encrypted or anonymous blockchain, because one of the most important things about payments is traceability. Now, there's a difference between privacy and anonymity. We all have a right to privacy, and that's not in question here. But the issue is that we can't have anonymity, because as soon as you have anonymity, it means that you're now going to go against all the already for years prescribed rules around payments as a traceable system. In case of auditing, or if a regulatory authority or law enforcement or tax authority wants to actually know the provenance of funds or something like that, it's very important to have a transparent ledger that can be audited. So Bitcoin itself was built with that intention in mind, for it to become something that is transparent and cannot be, information cannot be hidden away. Yes, you can still transact in a private way, but if for whatever reason you are made to report on your payments information, that is built into the Bitcoin blockchain. So the anonymity thing is an incredibly false narrative that when it comes to Bitcoin, and I'm specifically talking about the original protocol, Bitcoin SV, it's not anonymous. And then another thing is it's unstoppable. Now, that's another false narrative. You might hear when you're talking to people who are interested in these things that they use words like uncensorable or unconfiscatable. For them, that is a great feature. Unfortunately, that's going to be a feature that if they promote, they're going to find out that the long arm of the law can, in fact, stop these things. And I'm going to talk more about, how it is possible to be able to stop transactions, to be able to make sure that money launderers can't transact. If there's fraudulent activity going on, that governments can have visibility and law enforcement can stop. So just think of Bitcoin itself, the original protocol, because the altered protocols like BTC and Bitcoin Cash, the features that they've incorporated into their blockchains have made these features possible, and clearly they are not going to survive once regulators have the ability to catch up, which they're coming. It's coming. So Bitcoin SV for us as a fixed protocol, one that is regulatory compliant, and of course cheap. The original Bitcoin protocol has very small fees, micro fees, when it comes to payments. 1 cent, less than 1 cent transactions. So very importantly, transactions are not encrypted. What happens is every time a transaction is created and put onto the blockchain, it's put in there in plain text, and it's quite easy to see who's the receiver and where does the money come from. They are traceable. Every single transaction is linked to a previous transaction, and so we can then have this provenance of transactions, being able to see where the money came from the beginning of time till today. And if the identity of those addresses, which is where the payments are made, are known, and if you're an accountable institution, you would have to make those known, then it's extremely easy for an external auditor, without having access to your records, your accounting systems or anything like that, to be able to go and actually trace transactions. And this is what makes fraud impossible on Bitcoin. And then another thing is the control over transaction processing. Now, one of the great features around Bitcoin is that it requires large organizations to be able to accumulate the resources, to be able to set up massive data centers that can then go do all this payment processing. And because of that, we now have accountable institutions that are managing the control over the transactions that are processed. And they actually have the ability to freeze funds or confiscate funds that are used on the Bitcoin blockchain. And the reason for this is because they are large accountable institutions. By necessity, you can't be a blockchain transaction processor or miner without being able to, by hiding from law enforcement. You can't do that. So a very important thing is the necessity for there to be organizations, large ones, accountable ones, that are actually processing these transactions. And if law enforcement flags a payment as a fraudulent payment, then they in fact have the ability to freeze that transaction or even confiscate the funds. And so this is another false narrative you probably have heard when it comes to this unconfiscatable, uncensorable, all that false notion, all those false notions around what Bitcoin is about. It's naturally built into the system. Now, of course, blockchains out there are trying to move away from this, where we don't need large accountable institutions to manage the processing of these transactions. So you can imagine now that this is their goal. Their stated goal is to move on to other systems. They call them proof of stake or whatever it is, instead of the proof of work system, which is all about having massive data centers processing transactions. They want to try and get away from that. And the reason for that is because, not the stated reason, of course, but the implied reason is because they don't want accountable institutions to be able to freeze funds. And again, if you want to think about the future of Bitcoin as a payment system, it has to comply with local laws and even global rules. If we look at the Financial Action Task Force today, they are putting requirements and making recommendations around something called the travel rule, where you need to have the sender and the receiver the details in the transaction payload. And if you are able to now transact without having to go through a transaction processor, then of course, FATF and all these law enforcement agencies are going to make sure that as a business, you cannot execute transactions. So let me now get into a little bit of a case study here. I think that
Hi, Lorien, sorry to interrupt. I think we
am I running over time?
We have lost your slide. Your slides.
Oh, I see.
Yeah. I think you can't see your slides anymore. Of course, indeed, you're running out of time.
Did you see me then? I'm running out of time. Okay. Well, let me just quickly then move on to the case study of Centbee, because Centbee is, as I said, a going concern. And Zenzela, do I have a few minutes? How much time?
Well, I can give you 5 minutes.
Okay, 5 minutes. I'll zip through this. I think what I've said is good enough, but I want you to see that Centbee is a Bitcoin payment wallet here in South Africa and around the world, and we've now made it easy for people to be able to acquire Bitcoin and to be able to spend Bitcoin. And so what we have now is we've had integrations with all the supermarkets around the country, and it's quite possible for you to now go into any of these places and top up your Centbee wallet with Bitcoin, Peps, Ackermans, Builders Warehouses, all these sorts of things. And it's a very simple process. All you need to do is you just need to take your Centbee wallet to one of these supermarkets, and you create a voucher, hand over cash, and you can then receive Bitcoin in your wallet. Then once you've actually done that, you'll be able to then go and spend it. This is just a little graphic on our coverage. We're across the entire country, if you can imagine all those different retail locations. So it's very easy right now in South Africa to acquire Bitcoin SV. And obviously, you can't just have your Bitcoin, you need to be able to spend it. So what we've done is we've bundled a lot of payment options into Centbee Wallet to make it easy. So this is an extremely easy tool for people, and we think that the market here is for 16 to 25-year-olds who don't have Bitcoin, credit cards and all that sort of thing. So we think that this is going to be a very financially inclusive tool for people to be able to make payments. Now, the regulatory compliance stuff, I'm just going to quickly finish off on this. We do require KYC. We know the identity of our customers, and then we have the ability to do anti-money laundering and counter-terrorist financing checks. We can put limits into the transactions, so we, according to whatever the regulatory rules are. And what we do is then we have identities which then can link directly to the Bitcoin transactions on the blockchain. And this is what makes it easy now for us to be able to do all the right anti-money laundering and counter-terrorist financing checks, and to do all the reporting to the regulators, so that they feel comfortable that Bitcoin isn't being used in a shady way. Okay, so I think that's it. That's what I'll end off on. And if I do have time for questions, then I'll be happy to answer them. Thank you very much for your time. I'll just try to get back into here.
Thank you so much, Lorien, for that, and dispelling some of the misconceptions about Bitcoin and blockchain technology. If you have any questions, do not despair. The next panel discussion, or which is the next session, we're going to address issues around blockchain technology as disrupting the traditional banking and finance. So do not despair. We're going to take a just 5 minutes break. You can just grab a cup of coffee or a cup of tea, and in 5 minutes time, we're going to start our panel discussion. Please do not miss the panel. We have got experts from all over the world, from Hong Kong, Romania, Tanzania, South Africa, just to mention. So please do not miss the next session. Thank you so much. Let's take a short break, and we will start the next session in 5 minutes time. Thank you so much.